Good morning, good afternoon, and good evening, depending where you are on the planet. And welcome to today's Bull versus Bear webinar. And here on Tuesday, the 11th of April, Steve Miley here on the call for Trade Day. Welcome, everyone. Trust you're all well. First of all, I'm going to go through our usual regular run through in here today. What does that mean? Well, I'm going to take a look at the calendar, what we've had, what we've got coming up. Then I'll take a look at some headlines from the major news wires. We'll run through the major fundamental and macroeconomic influences that are impacting the broader financial markets right here, right now. We'll maybe take a very quick, brief look at the Fed tool. We looked at that in quite depth yesterday. We'll look at the Fed tool, see if there's any updates from there. Pretty much not. And then I will then run through some charts, and we'll take a look on the charts what we do have coming up potentially for trigger levels. Anything interesting happened from yesterday on the charts of the major markets that you guys tend to trade with us at Trade Day, focusing on the S&P E-mini, focusing on the NASDAQ, focusing on a very brief look in here at both the oil and gold markets, and maybe we'll touch on treasuries as well. Hi there, Robert, saying hello to Robert. So all good, you can hear me, right? Can I just get a yes that you can hear me? Because I am on the road still in here at the moment, so I'm always a bit cautious about the technology and whether I can be heard, but it's telling me at my end that everyone can hear me, so I'm assuming that's all good. So you can stick a yes in the chat if you can, Robert, or anyone else who happens to be listening in online at the moment on the live webinar. And remember, you can pick this up on the recording. Now, before I get into going through everything in here for today, let me just say this one thing in here regarding webinars for this week. So today's Tuesday. This is the Tuesday webinar. Tomorrow, Wednesday, I have a potential commitment. I don't know how that's going to go yet right here, right now. I don't know whether I'm going to get on Wednesday. Okay, guys, I will give you a heads up some point later today, probably late in the day, or maybe around the close or probably a bit before the close, but of the US markets, as to if the webinar tomorrow will go ahead or not, or whether James will be jumping in for me potentially. So that's one thing to say. Let me just check. You can hear me, you right? You can hear me, guys, right? I'm going to just type that into the chat. The other thing to say is that's tomorrow's webinar, okay, and I'll give you the heads up on that. Then the next thing to say is Thursday's webinar will be 1 hour earlier than normal, okay? Thursday's webinar 1 hour earlier than usual on the webinar on Thursday, okay? So please do bear that in mind. Again, it will be in the forums, it will be on the heads up in the traders room, but giving you the heads up on it here. Thursday's webinar will definitely be 1 hour earlier. Wednesday's webinar is a question mark. Hopefully will be good for Wednesday's webinar. And Friday we should be good as well. At the moment, we kind of postponed Friday webinars. I'm going to try and get on Friday, okay? I'm traveling on Thursday, hopefully back in the UK on Friday. So hopefully I'll be good to go for a Friday webinar, but I will let you know on that one if I can, please, guys. Okay, so that's the housekeeping taken care of. Let's take a look at the calendar. Two pieces of data in here. Actually, they've got the new loans data up here, but not quite picking up today's Chinese PPI data. We did get PPI data out of China, also called factory prices, factory gate prices, skid. Factory prices skid as demand falters, okay? And consumer prices slower than expected as well. Producer prices fall at fastest pace since June 2020, right? This is a massive positive, okay? This is a definite positive in here for, why am I not signed in on here? Should have auto signed me in. So this is a massive positive, guys, for global deflation, right, or inflation. Potentially deflationary pressures coming through from China. China's consumer inflation hit an 18-month low. Factory gate price decline sped up in March as demand stayed persistently weak. This is a definite positive in here, okay? Potentially China could export deflation to the rest of the planet and help out the whole problem. This is shouldn't be underestimated as how important this could be, okay? So first of all, pointing that out. We've had that out this morning. Also this morning, Eurozone data in here. Disappointing though. We had Eurozone retail sales data in a downward trend. Now the actual data itself, go to the calendar, you can see it came in bang in line with expectation. I'm a bit annoyed that you can't actually see the PPI data in here from China, but nevertheless. But here we go, minus 0.8 versus expectation of minus 0.8. So that came in line, but still the decline is obviously a negative. The retail sales are falling. Germany and France, obviously, which are the powerhouses, particularly Germany, of the Eurozone, the largest economies within the Eurozone, Germany and France, were the weakest, minus 1.3 and minus 1.5 respectively for Germany and France. So that's not good either. Okay. So kind of mixed data coming in overnight for markets in Asia and Europe. So we get the deflationary pressures coming through, which are going to help the global inflation scenario, okay, coming through from China. And then we get the retail sales falling off. Now, we expect, obviously, retail sales to fall off because the ECB, along with all the other global central banks, are in contraction. They're trying to contract the economies, right? So they're trying to do this anyway. But what we don't want to do is see that contraction to happen too quickly. Right, let's step to five. Actually, before we go to 5 things to start your day, let's look ahead to the rest of the day. It's a light on the calendar. Very, 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 very little in here at the US now for the rest of the day. The main focus is going to be Harker. Harker from the FOMC is speaking at 4 o'clock. Remember, this is Eastern time. 4 o'clock Eastern time. Harker is speaking out of the US. Now, let me just... Oh, sorry, we've got Kashkari as well. Kashkari, but not till 7:30, so after the bell, okay? Effective for you guys in the next trading session, okay? So 4 o'clock Harker, and then 7:30 we get Kashkari. Now, Kashkari is obviously more of a hawk, but if we go to our hawk dove sheet, now I must get a hawk dove sheet brought across in here for... in here, where are we? I can get it. I'll get it on FX Explain because it's my whole dove sheet in here. So this is a site that I co-own. It's good for education. FX Explained. If you want to come here anytime, don't plug it that often. It's got some good analysis. Got some good articles in here as well. And if we go and look in here, Hawk Dove sheet. Now I will get this Hawk Dove sheet brought across from here actually, seeing as it's mine in here. I own it. So it's not like it's proprietary or anything, though. This is just a list of the hawks and doves. So we got them from the Fed, but we've also got them, not that you guys are probably massively interested, from the Bank of England and also from the ECB, European Central Bank. Okay, but up in here we have the hawk dove sheet. Okay, and what do we see from the hawk dove sheet in here? Well, we're looking at the hawks in here. The doves at the top and the hawks at the bottom. And why is this important? Well, when a hawk says something hawkish, not such a big deal. When a dove says something dovish, not such a big deal. If you don't know your hawks from your doves, right? And they shift around as well. Now, back when we just, as a side note here, back when we were in the expansionary phase, when interest rates were super low, okay, Kashkari was always more of a dove. Okay, Kashkari was always up here. You wanted to keep rates low, you wanted to cut rates. Okay, Kashkari was always up at this end. Okay, now Kashkari is right there down this end. He's considered more hawkish within the FOMC. So they do shift. Okay, they do shift where they sit within the boundaries or in the spectrum of the FOMC. So you can see Kashkari now is more of a hawk, and he's a voter. Okay, so that's important as well. Not it's unimportant if they don't vote, but it's obviously less important if they're not a voter. They don't get a vote. So this obviously the voting, who votes and when they vote, goes in a rotation through the years. Okay, so they rotate in and out of voting positions. They all sit on the FOMC, but only some of them get voting rights. Okay, on the FOMC. So later today, as we said, going back to the calendar, Kashkari, who is a hawk. So if a hawk says something hawkish, not such a big deal. Kashkari is starting to step very slightly more dovish more recently. So we have to watch that. If he gives us some kind of dovish indication, yeah, like he did when he spoke, I think it was last week, beginning of last week he spoke. If we get another step slightly dovish from a hawk, that's a big deal. Okay. We also get, as we said earlier on, Harker speaking earlier. We go back to our hawk dove sheet, and I'm going to share this hawk dove sheet. Actually, I'm going to put it into the chat. Let me just bring that up. Make sure I get the right bit in here. I'm going to put it into the chat. There you go. There it is. There. Okay, so you get that there. But then we go, where are we? Where are I? Who did I say? Harker. So Harker is up here. Harker's more of a dove. So if Harker says something dovish, not such a big deal. If he says something particularly overly dovish, then maybe it is more of a big deal. Okay. If Harker says something hawkish, then that's a little bit of a concern. Means that maybe he's shifting a little bit more hawkish. So we're looking where they are on the spectrum and how dovish or hawkish the comments are relative to where they sit on the spectrum. Okay. It's not just whether the comments are hawkish or dovish in their own right. It's a bit like it doesn't matter whether the non-farm payroll comes in up or down, right? It's where it is with respect to consensus. Where is their consensus position in here, and what are they as hawks and doves, and where anything they say is more hawkish or more dovish. Okay, I think I've laboured that point a little bit now, but those are the only two real events that we have. Obviously, unless you're trading oil, we have the API weekly crude oil stock. You know about that. It's a weekly data. You know when the API and the EIA data are out because you trade that, or you should do if you're an oil trader. You should know when those are out on a weekly basis. Let's go to Bloomberg's 5 things you need to start your day. Hopefully you guys are all subscribed up to this. If you go to in here, I'm going to just quickly open this up, bloomberg.com/markets. You go over to the right-hand side, the most important market news of the day. Stick your email address in there. You get this to your inbox every day if you don't want to come and look at it on Bloomberg each day, okay? So what have we got in here? There's nothing really massive in here for today. Buffett is betting on Japanese stocks, okay? And Biden's meeting with world leaders in coming weeks comes after a trove of classified documents are dumped online, reveal just how closely Americans are spying on their friends and foes. In here, Swiss lawmakers are looking into Credit Suisse UBS takeover. And then what do we have coming up? Well, pretty much what we've been discussing already in here. So nothing significant in here coming through on the 5 things to start your day. And markets in here slightly up on the S&P and pretty much unchanged on the NASDAQ as we go into today. We've gone through that. So stocks slightly higher, US futures, bank earnings. Remember, bank earnings are coming up. We covered this yesterday. Where's my investing.com calendar, earnings calendar? Nothing really till Friday. Okay, so on Friday, we said in here, today's Tuesday, we get CarMax. That's not going to impact on the S&P. That's not going to impact on the NASDAQ. Tomorrow, Delta might have a little impact, but probably unlikely. It's not till we get to Friday where we get some of the big banks reporting. JP Morgan, Wells Fargo, BlackRock, Citigroup, and then probably more importantly, First Republic Bank. See how they're getting on, right? See what that comes through from them. United Health also report Friday, but that's a way to go yet. We've got a few more days before we get there. But before we get there, we do have, as I said, we went through yesterday. Tomorrow is the big focus. We have, where are we? CPI data. Why is it not on there? It is CPI tomorrow, right? Fed minutes on Wednesday night. Why is CPI not on there? It's VPI tomorrow, right? I don't know why that's not on there, guys. I'm 99% sure it's CPI on Wednesday, right? I'm just going to have to double check now because that's freaking me out. It may not let me into this calendar because from where I am. I'm pretty much sure that it is. I don't know why that's not showing on our calendar there. There it is. Boom, look, that's really weird. Yeah, it is tomorrow. I knew it was tomorrow. I don't know why I had to even double check, but when you don't see it on the calendar, so the calendar we've got pulling in from tomorrow, it's not showing tomorrow there. This is not updating, that's why. Okay, not to worry. It is tomorrow, CPI tomorrow. Oh, there we go. CPI tomorrow. Yeah, cool. And we get Fed minutes. Didn't put it in. Pulled in the Fed minutes though, right? Anyway, odd. I'll carry on. I'm going to get sidetracked otherwise. What else do we have going on? So stocks gain in here. Futures ed higher, focus shifts to inflation data. Yeah, we know that. Earnings. Bitcoin rallies. This is probably, Bitcoin has been very much acting like a risk asset. Okay, so it goes up with riskier assets, goes up with equities, basically. Bitcoin through 30,000 for the first time since June of last year. So Bitcoin pushing higher, maybe reflecting, echoing that we are very much in that risk on scenario still. And positive for stocks. Oil going higher as well with stocks. Risk on sentiments driving markets. Okay, so again, we had that big leap just over a week ago as we got the supply cuts out of Saudi Arabia and out of OPEC Plus. Sorry, the production cuts. Okay, we got that 8% leap, yeah, nudging higher. Dipped on Monday, back higher in here today, and dollar lower again a reflection again a reflection of the risk on scenario. Remember, dollar is seen as the safe haven, strengthened all through last year, the US dollar, because of both the US being aggressive on their interest rate hikes, but also seen as the safe haven. And now with the US probably less aggressive on interest rate hikes, and the rest of the planet staying more aggressive, certainly the eurozone. And remember, the dollar index is made up primarily over 50% of the dollar index is made up of the euro. Okay. So what else do I have for you in here? And what's going on in European markets this morning? So European markets up. Yep, DAX up 0.5%, nearly 0.8 on the CAC. That's the French index. The DAX is the German index. The FTSE, the UK index, up about 0.25% in here. And if you look at the US, what we're seeing in here, obviously we have the firm, not really much, fairly unchanged last night. Did got a strong impulsive move into the close, and then very, very slightly higher in here going into this morning. A quick nod to the Fed tool, as I promised you. This is pretty much where it was yesterday. Next meeting for the May meeting, beginning of May, 66%. So about 2/3 chance of a 500, go up to 500, 525. So a 25 point interest rate hike. That's what the market's expecting. That's what the equity markets, I think, have got built in, and then staying there for June. And then by July, though, we're looking for likelihood maybe for a rate cut, and then potentially further rate cuts through the end of the year in here. We covered that yesterday. I'm not going to go through all of that again. Right, I'm going to quickly now go through the charts. So we are getting a dip back lower in here at the moment. Okay, but we did have this line we drew yesterday. This is on the this is the Nasdaq. Let me start with the S&P. So there's the S&P. So we got a big sell-off and then a rebound. First of all, this is the daily chart. S&P. First of all, we rebounded from around the lows from last week, but also importantly, right off this 13-period exponential moving average. I always flag this. I know you guys are day trading. I know you guys are looking at 15-minute charts, and I know you guys are looking at 5-minute charts and 1-minute charts. Okay, that's fine. Keep the daily chart on in the background, right? This 13-period exponential moving average often works really well. So after the market comes down to it, pierces it, and then or touches it, and then rebounds off of it in here. And we certainly saw that yesterday. And if we go into the 15-minute chart in here on the S&P, you see that this rally we had in here was bang on the close, right? Right into the close, we got this impulsive rally, okay, yesterday, right into the close. Just 1 second. Yeah, right into the close, we got this impulsive rally. Okay, we took out this little rollover peak, so we had the impulsive move lower from in here at the end of last week. Okay, so this was the end of last week on Thursday. Okay, we saw that roll over and push lower back on Thursday last week. And then so we impulsively moved higher just to take that out going into the close yesterday, and then have held that for most of the session. We also just nudged about above that peak. But more importantly, we took out this kind of counter trend line. That counter trend line comes off the peak from the very beginning of April. If we go back to the daily, it's kind of the line that runs across there, right? That line that comes across there. We took out that line in here. There's that line there, okay? So we took that line out, okay, as with the impulsive move last night, okay, into the close, held that line, okay, and also then just this morning, okay, overnight, we've just taken out that peak there. So that was from last week, that peak being 41.4675 up to 41.49, and now we've failed back lower, and then we're fading back. Look, interestingly, we're coming back right onto the trend line, okay, and then you'll see as well, yesterday we rebounded right out of this whole support zone yesterday. I flagged this support zone down here in this area here, 41 like 15 to like 10 kind of area down here. We flagged all this congestion area, and it came down into that area and also bounced from these two lows. Okay, yesterday we bounced from those lows yesterday, and then as I said, off that 13-period exponential moving average. Yes, we're pulling back lower. Now I think we've got a whole volume area in here. Look at all this volume in here. From here, we've got these previous peaks here, previous lows here, low here, lows here, peaks here. You've got a big area in this zone here. So that zone I'm going to say is between pretty much the top of the zone is where we are now. Okay, so trading around 41.33 down to maybe 41.25. Okay, that area 24.25 at the bottom of that zone. Now, it's quite a big zone, I know. Okay, but I think we're going to try and hold in that zone there. That would be my feeling. Okay, if it doesn't hold that zone there, then it's back down to that lower zone, 41.10, 41.05. But I think this zone in here, 41.30.25, of 33 to 32 to 25 is going to try and hold. So I'm looking for the hold in here, and we'll get the next swing back higher from there. And if we take out the high again and get a push above that peak again, the peak in here from last week, get back above 41, 49 kind of area in here, we could be having a go at the peak over here at 41.70 potentially later today. That might be a big ask, seeing as going into Wednesday, we're going into CPI plus Fed minutes. All right, might be a big ask to get all the way up there. But if we're coming down, there's certainly a couple of decent trades in here to buy, I think, in this zone in here. Okay, so that's going to be buy zone there. And you've got similar stuff on the NASDAQ. So the NASDAQ in here, again, look, 13-period exponential moving average. Look how it worked down here. Worked back in here, end of March. Pierced it, came back above it. Worked back in here last week. Pierced it, came back above it. Worked yesterday. Pierced it, came back above it in here yesterday. Okay, so keeping an eye on that 13-period exponential moving average, 13.045. That is around that kind of area today. Where it, again here on the Nasdaq. Okay, it took out this counter trend line off the peak from the very beginning of April. Okay, through that high there. Got up to there right on the close, took out that little swing high as well. And then this morning, look, we've gone just up and pipped the high from last week, just about got above the high and then failed. Okay, so we hit 13.203 and a quarter, got up to 13.208.75, and then failed back lower. But again, look, flirting with the trend line. And again, where's the volume area in here? Well, you've got this kind of little sets of, I would say now, I'm looking at these peaks in here. Peaks in here and lows in here. So my zone in here is going to be between 13 like 105 down to maybe 13.080, that kind of area there, 13.105 to 13.080. Looking for the market to hold in there somewhere, swing back higher. It takes out the high again, the overnight high, 13.208.75. Okay, and then we could be up towards, I'm not saying all the way up to, excuse me, maybe up to 13,250, 13,300 kind of area. Okay, a very quick nod to gold and oil. Gold in here, we had that counter trend line. We looked at that yesterday. It still looked bullish, even though we had that setback. We're hanging on to a bullish tone. Again, 13-period exponential moving average. Look how well it held in here through the end of March, then pierced at the beginning of April, back above, pierced yesterday, back above, and we've come right off it today. And on the 30-minute chart of gold, remember this is the June contract. Look at that counter trend line. We've taken that out in here. Market's kind of rolled back lower, but looking for the next swing in here. Looking for it to hold maybe 2013 to 2010 area on gold, swing back higher from there, and then back up through the overnight peak, 2022 and a half. Could open up and move to like 2035, 36 kind of area, top side on gold. Oil. Take a look at oil. So now oil has retreated a little bit in here. Initially popped higher, but we're back lower in here now. So we did initially, that article, obviously the market had moved a little bit higher, but look, we're still caught inside. We're still inside this pattern, okay? Pretty much inside from the day that we broke above that last Monday it was on the 3rd of April. Okay, April 3rd, we leapt higher after the supply cuts, and the market's just been stuck. It's been stuck pretty much in the range of that day. Okay, and if we go into the 30-minute chart, you know, it's like head faking either way. Now that is setting up more negative right here, right now. Okay, because we're at the bottom end of the range. It's always though looks weakest when it gets to the bottom end of the range. If it does take out the low since then, the low is at, let me just find that. Sorry, 79 even, 79.00. If it takes that 79.00, it does look vulnerable to a deeper correction, to maybe $2. Okay, I look for it to at least fill at least, maybe not all that gap, but maybe, you know, I don't know, the gap's from what now? Somewhere around 76 to 79. So it's $3. So you look for it to maybe fill $1.50 of that. So from 79 down to like 77.5 potentially, if we broke 79. So that is a little bit of a worry. You know, it's had multiple failures in here, up here, like, you know, failed here, failed here, failed here, failed here. Again, overnight as well, it's just failed and failed again this morning. So it does look vulnerable to a little bit of a setback in here on the oil front. Okay, guys. Actually, quick nod to Treasury's 10-year note in here. So 10-year note looking vulnerable, I would say. You've got succession of lower lows, lower highs. You've got a double top pattern over here. Okay, so we're in that bigger bull trend. Okay, been in the bigger bull trend, and then you get double top goes in, and then the market's impulsively down through support there, sideways, impulsively down, counter trend up, looking vulnerable again in here. I think back down through really not much below. It takes out that low there, really. I mean, down through the low at 15, 14 and a half. It looks vulnerable again in here on the US 10-year note. All right, guys. Any questions from anyone? Any questions? Oh, thank you for that. I saw Greg was trying to help me out. Brent, thank you, and everyone. When I was struggling with it just wasn't updating, was it? The date wasn't updating. But it seemed to show I thought it showed the FOMC meeting minutes. But anyway, got myself a bit tied up there. But thank you for your assistance back then. Sorry, the way I am set up on the computer in here, I can't see the chat at the same time. So yeah, I mean, I was 100% sure it's CPI, but when you don't see it on the calendar, it's like, oh, what's going on? Okay. Any questions, guys? No one there. So remember, tomorrow, check the heads up, right? I don't want you guys getting up in the morning and I'm not coming on, getting up especially for the webinar. I'm sure you don't, but I mean, if you do, I'll put it in the heads up. I'll put it in the forums tomorrow, okay, in the traders area, okay? Please keep an eye on that to let you know whether there's a webinar or not tomorrow. There will be on Thursday, but it'll be an hour earlier. Obviously, it sits there in the trading room, archived anyway, so you can look at it on the recording. So if there's no webinar tomorrow, I'll definitely get one out on Thursday, but it will be 1 hour earlier and hope to get one out on Friday. I'm going to wish you all a great trading day. Lovely people. I'll be back with you in the next 24 to 48 hours in one of those two. And until there, take care, stay safe. Have a great trading day. Bye.